Ladies and gentlemen, good day and welcome to Greenply Industries Limited Q4FY23 post-results earnings conference call hosted by Smiths Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Ginodia from Smiths Limited. Thank you, and over to you, sir.
Yeah, thank you, Aman. Good afternoon, everyone, and thank you for joining us today on the Greenply Industries Q4 FY23 post-results earnings conference call. In the panel today, we have Mr. Manoj Tulsian, Joint Managing Director and CEO, Mr. Sanidhya Mittal, Joint Managing Director, Mr. Nitin Kalani, Chief Financial Officer, and Mr. Gautam Jain, AVP Strategy and Investor Relations. Before we begin the call, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available in the results presentation that was sent to you earlier. May I now invite Mr. Manoj Tulsian to begin the proceedings of the call. Thank you, and over to you, sir.
Thank you, Saurabh. Good afternoon and a very warm welcome to everyone, and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q4 FY23 and full year FY23. We began the year on a very positive trajectory in our plywood business with slightly subdued performance in the second half. However, concluded the year on a satisfying note. We have surpassed our original estimate of 15% value growth discussed during the beginning of the year by achieving an overall sales growth of 21% and a volume growth of 15% in FY23 versus the previous full year. On the margin front, we achieved an adjusted core EBITDA margin of 10.4% in FY23, a slight improvement from the previous year. This has been achieved despite ongoing raw material cost escalation, particularly in timber. Our working capital days stood at 36 days for the year. At the end of the financial year, our consolidated net debt amounted to rupees 632 crores. We were able to maintain our overall guidance of net debt equity ratio to remain within 1, with large part of our investments completed and projects commissioning concluded. The recent expansion of our plywood capacity at Sandila, commissioned at the beginning of FY23, is now operating at almost 60% utilization level in Q4 FY23. As the utilization of this unit improves further, it will support our overall growth. Looking ahead, we maintain a positive outlook for the plywood industry, driven by the ongoing recovery in the real estate sector and consumer shift towards the branded products. While the upward trajectory of timber price is a concern, we remain confident in achieving double-digit volume growth in our plywood business, which we have been giving as a guidance in the last couple of years. Furthermore, we anticipate some improvement in our margin profile also. We are committed to capitalizing on market opportunities and sustaining growth in the face of these challenges. Our Gabon business has continued to face challenges, although we saw some recovery in demand in the last quarter. In Q4 FY23, we achieved a sales of around 42 crores. At Greenply, we continue to be optimistic, supported by resilient demand in the residential sector, our strong presence in the premium category, significant investments in high-growth areas, and the continuous enhancement of our brand value. With the commissioning of our MDF segment, a major growth driver, we expect much higher growth trajectory for the company in the next few years. With this statement, I would like to hand it over to Sanidhya to update in larger details on the MDF business.
Thank you, Manojji, and good afternoon to everyone on the call. We are proud to announce a significant milestone achieved at Greenply with the successful commencement of commercial production of our MDF unit at Vadodara, Gujarat on 5th May 2023. The achievement was accomplished with a record time of 15 months, making it the fastest launch in the entire wood panel industry ever. The initial dispatches received positive responses to our products from all the customer segments. The MDF unit will cater to all product categories and subcategories within the Indian market to meet the diverse needs of our customers. Currently, the production is focused on interior grade, exterior grade, and HDMR. But as the unit stabilizes, we will gradually expand production into other categories as well. We have completed all our brand building exercises and our sales team is strategically positioned across different regions. Additionally, we are actively building our dealer distribution network in various locations to ensure efficient product availability and customer satisfaction. This achievement underscores our commitment to technological advancement, operational excellence, and meeting the evolving demands of the market. We are confident that the MDF unit will play a pivotal role in driving our growth, expanding our product range, and solidifying our position as a leading player in the wood panel industry. With this perspective, I would like to open the floor for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Pranav from Equirus Securities. Please go ahead.
Good afternoon, management. I just wanted to understand on your EBITDA margins for FY24 and 25. Now with the MDF also becoming operational, so are you expecting any initial losses in that business, and what kind of consolidated margins we can work with for next 2 years? That was my first question.
Hi, Pranav. In the plywood segment, I think we will be on a similar margin trajectory. We, of course, will try to improve further, but I think our focus at this point of time, and that's how we have discussed even at our board level, is that we must try and achieve a double-digit volume growth for the next few years, which is also backed on, which I always maintain, is that there is a shift which is happening from the unbranded to the branded segment. So volume growth is important, and at the same point of time, we are also looking at can we further improve our margin at this point of time on the plywood business. As far as MDF business is concerned, as we maintained in the last call, this is our first year. But despite being first year, where I think our utilization may be to the extent of 40-45%, the margins cannot be in the range of what the established players are today earning, but it is definitely much better than 10%. In which case, the blended margin will slightly look better during this year. And this will further improve when the utilization of MDF business goes up to the level of 75-80% in the next year. So we see a margin improvement, taking place for the next 2-3 years for sure at the blended level.
Okay, sir. And sir, my next question was, can you throw some light and can discuss the strategy on your JV in the furniture fitting segment? So, what is your thought process in the same, and how do you want to take this forward, let's say, over next 4 to 5 years?
See, it's very early days. As an organization and also our board, we have been discussing that we must look at a few products which completes our overall basket and which gives us the leverage in terms of the brand value what Greenply has created and the distribution network, which is the next strength of Greenply. That how do we leverage this, right? And we were always looking at some opportunity outside the panel industry where we get a very strong partner. So fortunately, this hardware business where we see that there is a larger opportunity, the way the market is also shifting to the high-end product category, we got a good partner, and we felt that this partner is serious because they also want to set up a manufacturing facility in India along with the Indian strong partner. So a lot of these things look good from both sides. Very early days. But I think in 2-3 years' time, this business will start doing and showing good results. And it will help us in overall, leveraging our the brand strength in this country and the distribution network which we already have.
Okay, sir. Sure, sir. And sir, any numbers you will want to share on this segment? Any margins and everything?
Too early, Pranav. I think first thing first, we are looking at, now that we are still yet to sign the final JV papers, maybe today, tomorrow, or maybe in a week, Nitin will be able to tell you. And once that is done, then our whole focus again would be to see that, how fast, one, we are able to create a team jointly, and second, again, establishing this manufacturing facility. These are the two tasks, first thing. And, then in between, of course, as time goes by, in the next 6 to 8 months, we start looking at the sales plan and other things. But I would say that, first 2 years, we should not be looking at anything very great coming from this business. But from year 3, looks like once we have a full manufacturing facility set up here, and also that, the team is well trained, we will be able to see some good traction from this business also. It's a high EBITDA business, much better than, what we are earning in plywood. And for sure, overall, this will help us going forward. This will also be a good learning for Greenply as a company, because this is a very high engineering precision product. And, this is a Turkey-based company, very systematic in their approach. And, they have a great R&D center. So I think there will be a lot of cross-learning also, which also we are looking at as one of the objectives going forward for our organization to, look at our future growth prospects.
Okay, sir. That's it from my side. Thank you.
Thanks.
Thank you. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Thank you for taking up my question, sir. So firstly, you said that volume growth would be in double digits. Could you highlight some numbers that what kind of volume growth you are looking at for 24 and 25?
See, I would maintain that we are looking at a double-digit growth. 10 to 12% volume growth is what for sure we are trying to achieve, in our plywood business. And if consistently we are able to do that, I think it will be good numbers. Looking at the type of challenges in plywood business overall, where the growth is, is suboptimal. It's mainly, I would say, distribution and again the shift of consumer preferences from the unorganized to organized. So we are banking on these two things. Of course, we are building up our internal organization also, and so looking at these 2-3 factors, we assume that we should grow at 10 to 12% for the next 2-3 years on the volume front.
Got it. And so could you throw some light more on, the timber cost escalation? What has been the same in Q4 and how do you foresee it in next fiscal?
Well, very difficult, because since I have joined, the timber cost is today, if you really look at in the 3 years' time, the timber cost is more than 100% increase. And every few quarters, I get to hear that, yes, now the timber production will improve, the new crop will come and the prices will drop down. But it has not happened in the last 4 or 8 quarters. So, and now I hear that this year also this challenge will continue, possibly next year. The prices will again come down when the crop is better. So that's what we are assuming, that for this fiscal year, it will possibly continue at these levels. It's going to be challenging.
Got it. So, sir, on EBITDA margin front, like you said, you'll be able to maintain at these levels. So is it possible that you could change some product mix so that you are forcing in the market with the shift happening towards organized? So could that EBITDA margin improve, or because of the RM pressure, you are assuming it to be at similar level?
No, so 2 things. I think, very, very good question. But on the RM side, for sure, I am not seeing that we will get much benefit. That is point number 1. Second, we are already a very strong player in the premium segment. And, whatever we may say, but there is today a pressure on the premium segment. So I am not seeing a big growth, within my own distribution, which goes in favor of the premium segment. So when I don't see that, I don't even get that leverage. The third leverage, of course, is growth. So, once I have the growth, I get some advantage of operating leverage. That's what I'm trying to see if that is able to mitigate my, if there is some increase in cost on the raw material side. Market is slightly subdued, so we are not even talking about the price increase also at this point of time in the market.
Got it. And so this last question, if I may squeeze on the net debt front that is 632 crores, how does it move in coming fiscal, and any capex due for this year, or all is done?
No, so I think we still have a committed cost of around 50 to 60 crores, which is on the MDF side, where the cash flow has still not taken place, but they are committed costs. So the cash flows will go during this year on that front. Maybe even the capitalization to that extent will also happen maybe during the year. It might be showing as a CWIP part of it. Second, on our regular plywood business, we would be looking at the maintenance capex of around 20-25 crores. These are the two plans which is there from the capex front. In terms of debt, I think keeping these two also in mind, this looks to be our peak debt.
Okay, so repayment we may assume from 25, if not 24?
There are repayments in 24 also. Maybe Nitin can exactly share the number afterwards. But I think there are repayments to the extent of 40-50 crore during the year.
Yeah. So we'll start repaying the MDF loan starting October, November.
Okay, so this is helpful. Thank you so much.
Thank you.
Thank you. The next question is from the line of Nikhil Agrawal from VT Capital. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. Sir, just a clarification. Hello?
Yeah, Nikhil, good afternoon.
Yes. So just a clarification. You had said that you'll be maintaining about 10% margins in the MDF segment this year, right?
No. 10% margin is for the plywood business. The MDF business today operates on a margin which is in upward of 20% for the established players. Ours in first year, where the utilization will only be around, let's say, 40-45%. We might end up doing a 14-15% margin. I'm just giving a ballpark number. It depends on how the market will remain and how the prices will remain. But we still see that we will be in that profile if the present situation is being maintained for the full year.
Okay,
so the
got it.
Margin will be slightly better.
Okay, the blended you mean MDF as well as plywood?
True.
Okay, and so you in the last call you had mentioned that you'll be targeting 300 crores of revenue from the MDF segment. So in FY24, so you still maintain that?
Look, as I said, price for sure is something which we'll have to see how it pans out. How we are looking at is a volume of around 1 lakh CBM, 100,000 during this first year. Because it's a ramp-up period, like the way Sanidhya mentioned that first thing first, we were able to, do the commissioning of the plant in the record time. And now the next challenge which as an organization we have taken is how fast we can ramp up and how fast we can bring all the product lines, which is there in the market. So those are the things which we are looking at. Keeping that in mind, our internal estimates are that if we do around 100,000 CBM in the full year, it will be a great ramp-up.
Okay.
And if we do 100,000 CBM, then the numbers can range between, anything around 275 to 300.
Yeah, I think it depends on the product mix. Since we are a new player and, we will be supplying all the types of product and we'll slowly start focusing on the value added and we'll try to increase our value added mix. I think the top line will be judged on what value added products we are able to sell. Because, products today are ranging in the Indian market right from almost approximately 27,000 rupees a CBM to 40,000. So it really depends that what volume are we able to sell in which category. So that will define our top line. I think we are committed to producing 1 lakh CBM this year and we're committed to making sure that sells.
Yeah.
Obviously in line with the competition at the realization levels they have.
Yes. And within this 100,000, what we are also looking at, the value-added products, how fast we are able to produce and stabilize that. So the more we are able to do it, the better can be the turnover, the better can be the margin.
Okay. Got it. So any light on the realizations currently? I mean, average realizations, any roundabout figure?
I think it's too early for us to comment.
Okay.
We are trying to make sure that, we are priced because, Greenply is a premium brand. We are trying to price ourselves at par with the competition. And we're trying to make sure that we're doing everything right to get the sales network. And obviously, we are located in that, so we want to capture the West market. So we, positioned our team also in that fashion that we are able to capture the closer markets to maintain our profitability.
Okay. Sir, a little bit on what you said just now. Like, what is the scenario in the Western market? In the West, like, are imports flooding the market out there as well as we've heard in the South?
Yes, imports are affecting West and South primarily. In other parts of the country, imports are not there. But every grade is not being imported in India and every size is not coming in India. And also, if you see the density of the imported product, it is slightly inferior. So, a lot of things are not possible in the imported product. So, we are trying to focus more on exterior, more on HDMR, which is not imported. And we're trying to leverage our brand name in a big way, and we're trying to create more and more customers who can keep buying our products sustainably from us. Times ahead when imports have opened up, it is difficult, but we are confident of the volume we are committing.
Okay. Got it. So just one last question. So your cost of raw materials quarter-on-quarter, they've fallen down. So if you could help in explaining that, how is that possible?
Cost of?
Materials consumed as a percentage of top line and even in absolute numbers, it's fallen down on a quarterly basis.
No, are you looking at the plywood business or?
No, I'm looking at the consolidated numbers.
Consolidated numbers also have today, Gabon and other businesses.
Mm-hmm.
So I would say that we should look at the Gabon business separately because that is another very different RNC and very different business.
Okay. Got it, sir. That's it from me. Thank you.
Thank you.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Am I audible, sir?
Yes.
Yes, Achal, you are.
Yeah. Fine, thank you. Sir, a couple of questions. One is, first on the plywood business. Yes, I mean, we have double-digit growth for FY23 as a full year, but if I look at 4-year CAGR, prior to COVID and where we are, our CAGR is substantially lower than the peer. Now, what I'm trying to understand is, have we gained market share? Have we just maintained market share? Or is there any marginal market share loss we have seen over last 4 years? I'm trying to figure out.
See, Achal, I'll tell you two things. One, how we have to look at is that where do we stand as an organization today? So every organization have their own, challenges, capacities. Where are those capacities? And where is the demand coming? The product lines. So within that same industry, also different companies have a different way of dealing. Our thinking process and our business plans are different than maybe many of the other companies which is there in the same business. So what we have to see is whether we are able to deliver basis, the business plan what we make. That is point number one, which we have been able to do in the last few years. Second, when it comes to market share, I would presumably say that, all the branded goods players are gaining market share of the overall market. Because if you really see whatever we as an organization have also grown in the last 2 years, I would say mostly, is not the type of growth which has happened in the overall plywood industry. So the branded goods players are gaining this market share of the total pie. And which is a very healthy sign.
Okay. Can you elaborate a bit with respect to the premium and non-premium mix for us, for the industry, and how it has changed over the last 3 years for us?
I don't have the number for the industry, but, I would say that in the premium segment, just one second, Nitin, can you tell me exactly the numbers? where we stand again for the last year?
1 second, sir.
So we are almost at around 50%.
Yeah.
Okay. I know. So it is between 50.
Premium would be 51% of our overall volumes, as against 54% in the prior year.
Yeah. So we are also growing in the mid segment, okay, because that is where the mass volume increase is taking place. But we are also committed to make sure that Greenply maintains its brand leadership through continuously launching products in the premium segment. That's what Greenply is always known for.
Got it. So you talked about volume mix. Can you just give some sense about the value mix as well for FY23 and 23?
Value-wise, we are at, last year we were 64% premium brands. This year we are at 61.3%.
Understood. Thanks for that clarification. The second question I had, can you help us understand what is the A&P spend in Q4 FY22 and Q4 FY23 in absolute numbers, sir?
A&P spend?
Yeah, advertisement spend.
A&P spend we have done in FY22, we were close to around, if I'm not wrong, 3.8%. And this year we were at around 3.1%.
Possible to give for the fourth quarter as well, sir?
Fourth quarter numbers, I don't have readily.
It's 1.6% for this quarter, and corresponding quarter is at 4%. 5.6%.
And 5.6%, right?
Yeah.
Now, the other question I had with respect to MDF business is that can you give us some sense in terms of what are the imports? Like you mentioned that not all grades are imported. What's a typical import mix you are seeing, and how do you see it evolving given the freight rates have come off, global MDF prices are down, and what's the expectation on the ADD front? How soon, what quantum can the industry possibly look at?
I think, at Greenply, we are just looking at the challenges as the challenges. If ADD comes, obviously we'll try all our efforts and, we'll put all our representations in place and we'll try to make sure as a company that ADD comes, and it's going to be a very beneficial scenario. But for now, for our planning, we are considering that there will be no ADD. The scenario will be as is, and we need to sail through in the tough time. So in the tough time, the major challenge is in the low density interior E2 which comes into the country, and mainly in West and South. So we are trying to build a market in the West, we're trying to build a market in the South, we're trying to build a market in NCR, which is the largest consuming market for MDF, and obviously in the other parts of the country also. And we're trying to focus that we produce more of exterior and more of HDMR, where the challenges in import is very, very low. Because that product is, like if import is 100, my estimation is that 90% is interior E2, 10% is all other categories put together. So, we're trying to grow in the value-added segment where we can make better top line, where we can make better realization, and we can leverage the word Greenply and the brand Greenply, which is our strength, and, so through these tough times. And once the ADD is in place and, the government realizes that it needs to protect the Indian manufacturers who are investing on facilities in India, once that happens, we will definitely see great numbers like how we were seeing in COVID times with all the competition.
Got it. We are also our business without the ADD thing. Okay, that's what we are plainly looking at this point of time. ADD will definitely, whole industry, I understand, is working on that. Whenever it happens, it can be definitely beneficial. And as Sanidhya is saying, ultimately the imports today is only the interior grade. And that's what we maintain, that we'll try to see how fast we can ramp up, beyond the interior grade into our exterior and HDMR and the other value-added products. That's the winning statement for us, that how fast we can ramp up and stabilize those production.
And also one more thing, as a company, we do not have any export liabilities on this plant. So, we are not bound to keep exporting at a lower realization. So that gives us an advantage that, we have no export liability. So, we will want to focus only on the Indian market and grow that. However, we might export 3 to 4% of our production just to have an alternate backup for our business.
Got it. Just at PBT level, what at the current price, what utilization do we break even?
Sorry, come again?
At what utilization does this MDF plant break even, assuming the current price of current realization level?
I think it should be the cash break even can happen around 45-50% utilization. So, it will just be, as Sanidhya said, it will depend on the product mix which we are able to sell within this 100,000 CBM. But there is a possibility that if the product mix is slightly better, we'll be able to, for sure, cash break even by selling 100,000 CBM.
Got it. And just one last clarification, if you could, in terms of the total market size for the West and South markets, where we would be far more competitive given the freight advantage. Can you give us some sense, A, the size, and B, how it is growing? Have you seen some flatness out there as well, or it's growing very well?
Sorry, can you please repeat the question?
South and West, he's saying.
South and West.
Sorry, can you please repeat the question?
Yeah, so South and West will be far more competitive given our location, right? Or West and Central rather, instead of South. So maybe you could elaborate which pockets we will be far more competitive because of the location, the manufacturing location, and what's the size of that particular catchment area?
So, our plant is very strategically located. Obviously, the West and Central will be my primary focus. But in South, Greenply has its own set of loyal dealers, and South is a huge consuming market. So we are also very well placed, and we have already launched our product in markets in Karnataka, in Andhra and Telangana. In other South states, we're not focusing, and entire West we are focusing. And NCR is one of the largest markets of MDF. So for us, NCR is also a very, very viable market when we look at the trade. Obviously, the market competition in NCR is huge because almost all the top players have a facility in and around NCR. But Greenply has its own set of loyal dealers and distributors, and that is almost 30% of the network. And 70% even in the MDF category when Greenply has come. I think we've received an overwhelming response from the dealer distributor network, and we are already transacting with a lot of customers. So I think I don't see sales as a challenge. We'll be able to sail through. Obviously, time that up and port is open, so the realization might come under pressure because more and more capacity will come in. But we will be absolutely in line with the competition in terms of the prices. We don't want to sell cheap.
Understood. Thank you so much. I'll come back in the queue. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit a question to one per participant. If time permits, you may join the queue for any follow-ups. Thank you. The next question is from the line of Parth Bowser from Investec India. Please go ahead.
Hello.
Hi, Parth.
Yeah. Hi, sir. So thank you for the opportunity. So my first question pertains to the EBITDA margins. So we see that your EBITDA margin improvement was somewhat led by lower A&P spends during the quarter.
You are not audible, sir. Parth, can you please come closer to the mic?
Hello. Am I audible now? Yeah. So in terms of your EBITDA margins, sir, we believe that the improvement during the quarter was partially led by lower A&P spend, which was 1.6% as you earlier guided. So just wanted to know, sir, what would be the quarterly run rate? Is this a normalized level, or will it go back to 3%?
You're saying for the A&P, right?
Yeah, A&P spend, yeah.
The A&P spend for the full year should be in this range. But what happens is that you can always see a quarterly fluctuation. That depends that as per the accounting standard now, you have to book the expenditure in the quarter only when you are actually incurring the expenditure. So the earlier accounting standard system was that if we know that, let's say we are going to spend a good amount of money in quarter 4, we used to keep a consistent provision throughout the year. But now the accounting standard does not allow it. So they say that only you have to, whenever you spend, you book it. But for the full year, we should be in similar lines. You may always see the fluctuations happening between quarter to quarter.
Right. So the Q4 FY22 number, the 5.6% spend, this was related to the LSG thing that we sponsored?
No, this year, yes, mostly it was related to that only, this year.
Okay. And sir, my second question.
Previous year we had LSG also, and we also had done our TV commercial in the last quarter. So the previous year spend was high in quarter 4.
Okay, got it. And so just wanted to know about the MDF capacity in FY24 for domestic players, and also like how much, what is the capacity other players are adding over FY24 and 25? If you could help.
I think we can share that data with you. We don't have it on our fingertips. For the listed entities and the larger players, yes, we do understand the Century coming with a large capacity. Greenply is adding another line. Action is due to start its new line, I think, in another 2 months. So we understand these players because, their data is publicly available. The smaller players are coming in also very fast. I think their data is collated. We can share with you the data we have. And also learn from your community. You guys usually have better data than us.
Yes.
Our data also flows through all that.
Fair enough. And sir, just wanted to know, I guess you guided that Sandila plant, it operated at 60% utilization, right?
Yeah.
So sir, here on, if this plant, it operates at 100% utilization, do we expect that, since we are moving to our own manufacturing products versus trading, I believe that, your share of trading and outsourced volumes would go down. Do we expect any margin expansion? Can we see that?
See, Sandila plant, definitely the margins will be slightly better than, the other plants which we are operating. Some of the other plants, not all the plants. So, yes, there can be an advantage. But, this is not about trading or own manufacturing, because if I am talking of a 10 to 12% volume growth, there is a sizable overall turnover growth which will happen. So, partially it will come out of the Sandila plant by higher utilization. And partially maybe, we'll be depending on some of these new facilities like Hapur and few more facilities which we are looking at even in South in terms of the tie-ups what we have. So it will be a mix. The growth will get, catered to through both our Sandila additional utilization as well as these trading platforms what we have.
Okay, perfect, sir. Those are my questions. I'll come back with you. Thank you.
Thank you.
Thank you. The next question is from the line of Rupesh Tatia from IntelSense Capital. Please go ahead.
Hello, sir. Thank you. Thank you for the opportunity and congratulations on commissioning of the MDF plant.
Rupesh, your voice is not very clear, Rupesh.
Hello, sir. Can you hear me now?
Yes, we can hear you.
Yeah, we can. Okay, yes, better.
Yes, sir. I was saying, sir, congratulations on successful commissioning of MDF plant.
Breaking.
I am just a minute.
Are you using the handset, Rupesh? Come in.
Yes, I am using the handset.
Yeah, it's better now. Little better.
How about now? This is a better reception area?
Yes, slightly better, yes.
Okay. I was saying, sir, congratulations on MDF plant commissioning.
Thank you.
Yeah, my question, sir, is based on raw material supply in the western region, is there a possibility for a second plant either by you or a competitor in the western region? This is my question number one.
So I'll answer this question. So in the region where we are, our closest competition, not in terms of the end product, but our closest competition in terms of buying raw material will be Marino. So the good thing is that we could start our plant 5 months ahead of them. So we were able to establish a buying relationship with the farmers and with the local community before they could establish. So that was a big advantage for us. Plus, there's also JK Paper Mill, which is about 300 kilometers from our location, which also is a major consumer. So given 3 of us, in the short run, I really don't see a space for another large MDF capacity coming there. But we are working very, very hard to ensure that our raw material is available sustainably. In the last 2 fiscal years, from the time we had purchased the land to we actually established our plant, we already started the plantation drive with the farmers. And very proudly, I can tell you that we've done over 2 crore saplings only in the last 2 financial years in that region. And at full capacity, when we run our plant, we need about 80 lakh trees a year. So, more than what we need is what we are planting in that area. And we are working with the local community and trying to make sure that, with the industry there also thrive, it's a win-win for everyone.
Mr. Tatia, to ensure...
Our raw material cost to invest is more or less at lines with all the manufacturers in the north.
Yeah.
Thank you. Mr. Tatia, to ensure that all the participants are addressed, may I request you to join back the queue for any follow-ups? Thank you. The next question is from the line of Dhiral from Phillip Capital, PCG. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, I just have 2 questions. Sir, on the JV side, are we not able to, address the issue? Because if I look at the volume on JV on a YY basis, it is still on the declining mode.
Which JV you are talking about?
So the existing JV at Bareilly, which we have 2 JVs. So on a YY basis, there is a dip in the volume.
Yes. So, there we have faced some challenges in terms of, ramping up part of that one facility. And that has continued. So we are trying to resolve it. Okay. We have not been able to get the best of the traction from these Bareilly units, if you truly see.
Thank you. Dhiral, please join the queue for any follow-ups. Also, participants are requested to limit their question to 1 per participant. If time permits, you may join the queue. Thank you. The next question is from the line of Asim from DAM Capital. Please go ahead.
Hi, good afternoon. Sorry if this was addressed earlier, but I just wanted to understand that if your volume growth expectation for plywood is, say, double-digit, 10 to 12%, would revenue growth still be lower than this since premium segment is under pressure, plus you don't have leeway to take price hikes? And also, if you could just talk about what would be the ESOP cost component in FY24? Would it be same as FY23?
In terms of the ESOP thing, I think Nitin can tell you. It should be in the range of maybe for the full year, 4.5 or 5 crores for this year. Nitin?
Yeah, that's right number, approximately 4 crores.
4 crores. For this year, as of whatever has been granted, right? This is the grant which is given, right?
Yes.
Any fresh grants, if it is given, then that may bring in additional cost. And your first question?
So basically, revenue growth would be lower than volume growth.
So at this point of time, I'm assuming that it should be similar because in Q4 we had taken a price increase, but we could not actually pass on the same. This year we will try to see that if we are able to pass on the same. Though still we have not been able to do it till the month of May. So the additional schemes which were going on. So that is one protection, if we are able to do that. And second, of course, we, as I said, that we are quite determined that we should be maintaining our premium segment share of business within our overall pie. So these 2 factors are there. At this point of time, I would say that best assumption is, similar volume growth and value growth.
Thank you. The next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Hello, am I audible?
Yes, Rajesh.
Yeah. Hi, sir. My question pertains to first on the Gabon subsidiary. Could you throw some light on what is the outlook for the same revenue and margins?
Last quarter was better. We had some good order book, and the real worry of Europe also slightly subsided in terms of their manufacturing facilities in this post the Ukraine war. So we got some better traction. If you really look at this quarter, I think this business is now we are actually measuring on a quarter-to-quarter basis. this quarter we have a decent amount of orders which will be helping us to do a similar number as of Q4. We have capacities in place. If things stabilizes, things improves, then for sure, we can even do better numbers there. And we have tried to see wherever we are able to cut down on costs and other things, rationalize those areas, which we have already done. So, but giving you an outlook for the full year or something, I can at best at this point of time say that maybe we will replicate our Q4 performance during this year for sure. It's much visibility is there.
Thank you. The next question is from the line of Govind Lal Gilaria. As an individual investor, please go ahead.
Good afternoon, sir. Thanks for the opportunity. So regarding this, hello?
Yeah.
Yeah, go ahead.
Are you able to hear me?
Yes, please.
Yes, we can.
I want to get a longer term outlook, sir, on MDF. These margins, there are a lot of volatility is there. So what kind of margin is sustainable for, let us say, 2, 3, 4 years? What kind of margin band it will be, MDF?
I think there are a lot of external scenarios which are actually defining the margin. It totally depends. I think somebody asked about the ADD. So if ADD comes in, the scenario totally changes. If ADD is not there and import, the sea freight remains low, the scenario is different. If the sea freight increases again, the scenario changes. So I think it's very, very difficult to predict that what the margin will be next 4 years. But we are very confident that, the organized segment, the green panel or century action, we in our margins, in everything, in our realizations and everything. So it's very difficult. I don't think it will be right for me to comment that what will be the margin in the next 4 years. We'll be in line with the competition, and we are very confident that we'll be able to sell our production and ramp up at the scenario of the market.
We will be matching the industry level. We have similar facilities, the best of the line, all the product lines which is there with any of the established player today. So that the derivative would be that where is the industry heading to? The outlook can always be given as a very positive outlook, but I would say the best way to look at it is that we have to go with the flow, and wherever the industry, the top 3-4 players are heading to, including us, we all will be possibly in the same range.
Thank you. The next question is from Arun Baid from ICICI Securities. Please go ahead.
Hi, sir. Just one clarification here. Just one clarification here. We have already started our MDF business. We already have a dealer network in place. What is the kind of working capital or the debtor days you're working there, and what should be modeled from our perspective for this business? And number two, correct me if I'm wrong, when I spoke to dealers in North and even in West, they told me your pricing is a bit cheaper compared to your competition. So please, can you just throw light?
Hi, Arun. I'll throw light on the first question first.
Yeah.
So I don't think we are, we are selling cheaper than the competition. We are absolutely in line with the competition. Obviously, when you start up the line or, they are ramping up, so maybe, your A2 grade is more produced than your A grade. So the realization on the short run for a quarter or two might look slightly subdued compared to competition. But on a full year, on a long-term 2-3 year basis, prices will not be lower, for sure, number one. And what was the first question again, sir?
On the working capital.
On working capital, we are not offering anything extraordinary as a company that, the working capital days are free and, we're going to replicate the plywood model there or anything like that. We're absolutely in line with the industry, and our CD terms, our APD terms are very, very strict, exactly the way other companies are doing. Almost, I think, our internal target is 30-35% business in advance, balance on a 7-day CD, on a 14-day and on a 21-day. just the way others are operating. So, we are operating in the very similar fashion.
Okay.
So, on a short run, since our volumes will be lower for the first 2 years, 45-50%, then 70-75, and then 100. So on a short run, in a smaller turnover, our days might look. At once our capacity is completely achieved, and we are selling the entire capacity. I don't think we will be anywhere. We will be absolutely comparable with the competition. Our days won't be higher than theirs.
And just one follow-up here was that, when we planned this plant, we would have ballpark, some estimate about EBITDA, right? What you think from this business is. So we are, a participant asked that question about EBITDA, a sustainable one. So what would that number be in your mind? I know it changes because of various situations you mentioned very correctly, but when I'm putting up a plant, I would have a ballpark number in mind that this is my sustainable margins or EBITDA per CBM, whatever you want to look at. What would that number be in your assumption?
Definitely on the lower side, we were targeting anything between 20 to 22% EBITDA. This is what we feel is sustainable on a long-term basis. Even if you take out a 5-6 year average, we feel that we'll be at least there 20-22%. And for our cash flow purpose and for our payback and for our banking, etc., we designed everything at 17% because we wanted to be very, very safe and conservative as far as cash flow is concerned.
Thank you. The next question is from Neeraj Vijay Kamtekar from Prospero Tree. Please go ahead.
Hello. Am I audible?
Yes.
Yes. Thank you for the opportunity. Sir, what is the sales value of own manufacturing plywood at standalone level? What is the sales value of own manufacturing plywood at standalone level? Maybe not looking at the number like this. Maybe Nitin or Gautam can give you this number afterwards, Neeraj. Sorry? Nitin or Gautam, maybe you can get in touch with Gautam. He might be able to give you this number afterwards. I don't think we have this number readily available at this point of time. Okay, fine. Thank you. Yeah.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Saurabh Ginodia from Smiths Limited for closing remarks. Thank you, and over to you, sir.
Yeah, thank you, Aman. I would now request Mr. Sanidhya Mittal to add any closing comments.
Thank you all for taking time to participate in this call. In case of any further clarifications or query, please feel free to reach to Mr. Gautam Jain. Thanks again and goodbye.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Smiths Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.